So now we are going to look at swing structure, and swing structure is probably what I would argue is probably one of the most important things, let's say, for you to know. It's basically where I start whenever I have a blank chart and I sit down. It's the first thing I am basically looking to map, looking to analyze, and looking to figure out. So in live markets, in the future, if you ever get confused, if you're ever getting lost, if you're wondering where to start, swing structure is always the starting point of sort of whatever time frame you were looking at, because once you can figure out what current swing range you are in, so where your current swing high is and where your current swing low is, that will tell you whether the swing trend is bullish or bearish, which for obvious reasons is quite important, what swing range you're working within. So that way you can build, it's kind of where you start from to build the rest of your analysis and where you start from to build your trade ideas. Because if you get your swing structure correct, obviously with using all of the other confluence you're going to be learning, but generally that's going to help you to be on the right side of the market far more often than not. Okay, so without further ado, let's just kind of dive into it. So a quick recap on sort of the basic theory. So actually I would recommend you probably have a little refresher of the very first video in this module called, I believe it's called Basic Market Structure, right? And where we go over higher highs, higher lows, lower highs, lower lows, and strong and weak highs and lows, okay? So with swing structure, we're just going to focus on it here now, right? Because you should be very familiar with the concept that a bullish market is higher highs and higher lows, right? We target the weak structure. The weak highs are the highs that fail to take out the lows, right? And the strong lows are strong because they caused swing breaks of structure, right? After the swing break of structure, what do we expect? We expect that swing pullback, but we expect that it will not breach the strong low. So we're trading within this range. We expect price to pull down in towards the strong swing low, right? But because it's strong, the expectation is that it will hold. The expectation is that it's protected. And then the expectation is price will move to the upside and it will target those weak highs. Why is it weak? It's weak because it failed to take out the low, right? And that's the sort of the very basic theory of how we follow the trend, right? Obviously, in reality, we can get a lot more complex price action, right? Where you see a lot of highs and lows being broken, and the whole idea is how can we figure out where the true swing range is, the swing high and the swing low is that we want to work within. Okay, so when the swing trend is bullish, okay, when we get a break of the swing high and we get that bullish break of structure. For swing structure, we need a candle body close above the high, right? Above the swing high. We need to see price close above it. So with fractal structure, it can just be just a wick. So on fractal structure, the exact moment that price trades higher than the high by 0.1 pips, that is the fractal break of structure happening. And straight away at that exact moment, you can look for the nearest low, right? That's what we do with fractal structure. Swing structure is different because with swing structure, we want it to be significant. We want to see price close above the high. So you need to wait for the candle body on the time frame you're looking at. You need to see if it's going to close above, because sometimes it can move up and then it can spike back down, okay? So you need to see a candle body close. Now, as soon as we get that, that is the swing break of structure, which is what we call a boss. To find a swing low in a bullish market, a swing low is the lowest point that broke the swing high, okay? So for fractal structure, what is it? We always find the nearest low, which would be here if this was fractal structure. But for swing structure, we need to find the lowest point, okay? Because with fractal structure, we want to be aggressive. With swing structure, we want to be a lot more conservative. So when we get that break of structure and we want to go, okay, where is our new low? Because obviously at this point, right, we're trading between this high and this low, and price pulls back and it does its thing and it messes around. But once we get that bullish break of structure and the swing trend continues to the upside, the low doesn't stay here. We need to find the new low. And the new low is the lowest point that broke the swing high. Okay, so when we look back, obviously we can see it's this low here. Okay, so a mechanical way to kind of find that, and sometimes it's a bit tricky, is in a bullish market, the new swing low is the lowest point between the two highs. Okay, so that's your high, that's the high where it breaks. So from where the high is printed to where it breaks, between those two orange circles, the new swing low, when that boss occurs, will be the lowest point between those two there, okay? So you could grab your box tool and you could draw it from the high across to where it breaks, right? And then drag it down. It would help if I had a different color box. There we go, right? So that gray box, in between there, where's the lowest point? And that can help you, okay? So after the high is printed to where it's broken, where's the lowest point? That's always gonna be your swing low, okay? So in a bullish market, finding the swing low is 100% mechanical. There's no if, buts, or maybes, right? Once you've got your swing high and then where price breaks it and you get the candle body close, it's always the lowest point. Okay, so that is 100% mechanical. There's no discretion involved, okay? Now, once we have that breaker structure, obviously we then start to expect that swing pullback is going to kick in, okay? But we can't map out where that swing high is until we've had significant enough of a pullback. Once we start to see a large enough pullback, right, relative to the recent price action, that's when you can then mark out the high, okay? So as you can probably guess, this does require a little bit of discretion, okay, in what you define to be significant enough of a pullback to say, okay, that's a swing high, right? And the reason why that's important is because let's say you have your breaker structure here, right? So price comes up, it does its thing, and then we get that breaker structure here, right? Price can pull back like, a tiny bit, but I'm not going to mark that out as my swing high straight away, because if you do, then if price breaks that to the upside, is that really a swing pullback compared to the recent price action? It's not, is it? That's more of a fractal pullback or potentially an internal pullback, right? So that's why I don't mark out in a bullish market, right? In a bullish market, I do not map out or mark out my swing high with a nice gray circle like this until I've seen a significant of enough pullback relative to the recent price action, right? I want to see those clear and obvious big swings in the market, okay? So just to make that more clear, in a bullish market, basically everything is 100% mechanical with your swing structure, apart from, it's down to you to decide what you deem a significant enough of a pullback to map out where that high is, okay? But everything else is mechanical, because once you get that breaker structure, it's the lowest point between the high and where it's broken, which would be here, right? And that's, like I said, on 100% mechanical. You need to wait for a candle body close, again, completely mechanical. But when price is moving to the upside, you might have a little bit of a pullback, right? But if price breaks that, I wouldn't classify that as a swing pullback relative to how big this pullback was, right? So I want to wait for that. And as soon as price kind of pulls back like this and you're seeing that deep pullback, okay, now I'll mark out my swing high with a nice pretty circle. I'll draw my swing high line across. And now I know that if price does break and close above here, that is a true swing breaker structure. And then obviously you can mark out your lowest point, and then, yeah, you'll know your new swing range, okay? But we'll go all over this on the price charts in a bit, and it will make a lot more sense. And then obviously the exact opposite for when the trend is bearish. So when we get that breaker structure, we expect this swing pullback, right? So at that exact moment that you get that breaker structure, we know where the high is. It's the highest point that broke the low, right? There's no if, buts, or maybes. It's always the highest point between those two lows, right? Where the low was printed, price falls back to where it's broken, you find the highest point, that's your new swing high, okay? When price starts to pull back, we only mark out with our pretty circle, right, where that new swing low is, only once we deem there to have been, a significant size pullback relative to the recent price action. So when we get that deep pullback, that's when I'll then circle this low and I go, okay, here's my low, I already know where the high is. And as price pulls back, we know that this is a strong high, right? Why is this a strong high? It's strong because it broke the low, it did its job. So we expect the swing pullback to pull back, but we expect it to not break the strong high, right? That's the expectation, okay? Let's clear this up a little bit. And then price does its thing, right? Chops around, and then eventually we get that continuation of the bearish swing trend where we get a break of that swing low, right? And we get the break here. We need to wait for a candle body close, remember? Now, at that moment that we get the break and the true swing boss below this low, we need to find out where is the new swing range. Where's our new swing high? Well, remember, a swing high is the highest point that broke the low, that broke the swing low, okay? So that should say highest, okay, with a 1T, obviously. And that's how we find it. So it's the same as this, as the bullish market, but just the exact opposite, okay? So when we get that breaker structure, you want to look back on where's the highest point. Again, you can use the box trick to draw your box from the swing low to the point of where it's broken and then drag it to the upside. And you want to find the highest point in that box. And that's your new swing high, okay? So you can draw that on, as soon as you get that breaker structure, straight away you can draw on your new swing high. You know exactly where it is in a bearish market. But we don't know where the swing low is. We can't map that on with our pretty gray circle, right? Until we have what we deem to be significant enough of a pullback, okay? And then once we do, we can map it on. We know that's our new range. Obviously, we expect price to pull back up, but not to break the strong high. Why is it a strong high? It's strong because it took out the low, so it's strong structure. So it's protected. We expect price to pull up, but not break it. and then we get another boss, and then exactly same thing, right? Then we draw on a new swing structure. We know that's the highest point that broke this low after it was printed. Here's our new swing range, right? But we won't map out the swing low with our pretty circle, right? Until we've had what we deem to be significant enough of a swing pullback, because we don't want to be marking swing lows if it's just little, right? That's not going to be a swing boss, right? So we want to wait for the sizable pullback first. Okay, now I'll mark that on, because if price comes down and breaks it, that's a lot more significant for it to be a swing breaker structure. Okay, so again, to make it very, very clear, with swing structure, everything with this method is 100% mechanical, except in a bullish market, just defining what you deem to be significant enough pullback to mark out the high. That will require some discretion. At least at the time of recording, I use discretion personally. And then vice versa in a bearish market, the swing low, we only mark it on when we deem it to be significant enough of a pullback. Then we can draw on, okay, that's our swing low, right? Now, there are mechanical methods you can use. You can introduce, say, a pip rule, where you will wait for price to pull back, let's say 50 pips on a certain time frame for a certain pair, and you go, okay, when that's happened, we've done that. But I'll talk about this, potentially in another video, right? And you can use volatility-based things as well. But again, enough for this video. We'll leave it in there. But for now, we're just going to use a little bit of discretion, okay? And we can hop on the charts and go and map this out.